We are joined by Vassili Serebriakov, currency strategist with Wells Fargo Bank. I apologize. We were practicing your last name through the commercial break, but I'm all tongue-tied today. It must be that Christmas is so close. Welcome.
It's okay. Thank you.
Comment from me first on today's turnaround in the dollar. Is this about the U.S. economic news?
Yes, I think the two forces that have been driving the dollar higher in recent days were really the position adjustment at the end of the year and better economic news and the repricing of some of those Fed expectations. I think the position adjustment is well advanced, and we got some bad U.S. economic numbers today, so that pretty much explains the move.
So the dollar, though, before today was showing a real nice end of the year surge. Is that just you're describing the positioning toward the end of the year? Or is this where we're finally starting to see the bullishness come in? You've been bullish, right, for a long time. Is this finally where it's clicking?
What's interesting is that the dollar actually tends to do badly in December from the typical seasonal pattern. This time is different. And part of the story, a big part of the story, is the Fed trying to incorporate the Fed expectations a little bit more with some of the stronger than expected jobs data that we've seen. Perhaps the Fed is not going to be on the sidelines for next year. And that's, I think, what's been helping the dollar.
So what is your forecast for rates?
Well, we're not looking for an actual rate hike until very late in 2010. But I think people have been focusing on rate hikes a lot. But we have to look at also winding down of this non-conventional easing, withdrawal of some of this dollar liquidity. That's going to be important for the dollar.
Yeah, indeed. That's for sure. That, I guess, wraps up in February, at least the mortgage purchases, right, by the Fed. And that's going to have an impact, you're saying, for the dollar?
That's going to be a starting point. It might necessarily lead to a particularly strong dollar rally, but it's going to stabilize the currency. And then also we're going to see some more measures to withdraw that extra liquidity.
So, Vassili, all this at the end of the day means a stronger dollar in 2010. What's your forecast?
Well, we're looking for the euro at 132 at the end of 2010 and dollar yen at 108. Essentially, we think also some of the structural factors are positive for the dollar. The current account deficit is down to 3% from 6%. This is positive. It means that even a small pickup in capital inflows is going to be positive for the greenback.
Okay, so the other factor I want to ask you about, investors buying dollars again because of solvency concerns, Greece and Spain making the euro now less attractive. Is that factoring in at all to this recent rebound?
I think it's been part of the story. We're less convinced that this is kind of a long-term momentum story. It's probably really in the short run. That said, we expect the Eurozone economy to actually underperform the U.S. next year, and that's also part of why we see the dollar doing better.
So if the situation with those countries and their debt issues turns out to be not so bad, you wouldn't really see a reaction then?
Well, I think we might see a pullback in the dollar in the first quarter. I think the dollars went quite far in quite a short period of time. So we might see a pullback in the first quarter, but over the course of the year, we would expect it to recover.
Rising dollar mean a lower gold price next year?
Yes, I mean, again, this is probably a trade that's driven by this vast amount of liquidity in the system created by the central banks and a weaker dollar. If both of those trends are going to reverse next year, gold is probably going to come under some pressure. And
then oil, with an increasing economic picture, albeit small, is that playing into more strength under the oil barrel price?
Well, we're probably looking at a steady to slightly stronger oil prices. Again, you have the force of the recovering dollar potentially weighing on oil, but at the same time, economic recovery helping oil. So we are looking for a steady to slightly higher.
Interesting, the interrelations of all of these asset classes and products. As always, Vassili, thank you so much for joining us. Great to have you on set today.
Thank you.